The one good thing about recent economic surveys has been that the chief economic advisor has spoken his mind clearly and given an indication of what really needs to be done to try and get the economy to move faster. Joining us for his assessment of the state of the Union economy at the moment and the prescriptions required to grow faster, I have Dr. Anantha Nageswaran, India's chief economic advisor. He's joining us on the day of the economic survey. Dr. Nageswaran, welcome. Since time is short, I'll get straight to the point. I want to ask you first about the nature of India's economic slowdown and your reading of it. Last year, our economy grew at 8.2%. This year, it's expected to grow at 6.4%. A big debate rages about whether this is temporary, cyclical, or does it reflect a structural slowdown. I want your understanding of the nature of this economic slowdown and your expected time frame for recovery. Do you accept the criticism being leveled by several like your predecessors like Raghuram Rajan, Arvind Subramaniam, who think that this is a structural slowdown, it's not temporary? Dr. Nageswaran.
First of all, thank you, Rahul. We have to place this economic slowdown in the context of the fact that global real economic activity index, which the Federal Reserve Bank of Dallas maintains, has been slowing since 2023 beginning. So it is not an India-centric phenomena. It's a global phenomena, and India, having grown at extremely good rates in the 3 years post-pandemic, naturally there will be a consolidation, and it is also contributed to by global factors. The second half of the current financial year will already be better than the first half, which was a combination of several factors. Of course, elections, you have slower capital spending by the governments, in fact, not just the union but the state government, and also a myriad of actions, macroprudential actions by the central bank. But to some extent, the fact that even a 6.5% growth rate is now considered inadequate shows the level of aspirations have gone up, and that's a good thing. So I don't agree with the argument that this is a structural slowdown. Yes, we can always do better than what we are doing, and that is what we should strive for. But I think the slowdown was brought about by a combination of several near-term factors rather than a structural reason being responsible for it.
The other, of course, I was listening to your press conference and you made the point that India needs to grow at about 10% per year to be able to achieve the target of being a Viksit Bharat by 2047.
That's in nominal terms.
In nominal terms, India needs to grow at 10% per annum to achieve that target. And if our real rate of growth is only 6.4%, the likes of P. Chidambaram and others, when they watch this interaction and read your survey, will say there is just so much of a gap between what the government says we will be in 2047 and our current rate of growth, and the two are never going to meet. That this is just a jumla that the government is throwing.
No, Rahul, that is 6.5% is 6.5 to 7 is real terms.
Sure.
10% is nominal terms. So if you add inflation, then the question is, if the Indian rupee in the coming years were to do well, then 6.5 plus inflation rate of 4 to 4.5, 11%, and even if the currency depreciates by 1% per annum, then you will be able to achieve a growth rate of 10% in dollar terms, and that is what we are looking at. So there is no disconnect between the two.
Okay, let's now come to foreign direct investment. In the first half of this fiscal, net FDI into India was just $0.48 billion. How concerned are you by the fall in net foreign direct investment into India? One, of course, is that the American markets are looking better, and therefore, and America is also trying to attract a lot of foreign investment and American companies coming back and investing into India. But just the fact that actual net FDI coming into India has come down, why do you think that's happening, and how concerned are you about it?
FDI coming into India actually has picked up in the current financial year. That is the gross FDI number. The net FDI number is lower because repatriations in the last 2 years had picked up. And by the way, repatriations are of investments made at any point in time in the past. And if they have been sitting on a huge amount of unrealized profits, and given the state of the Indian market, which was making new highs every week, every month, it was natural for investors to cash in on their investments and exit. So in a way, that too is a good sign for future inflows from foreign sources. So I think, and given the state of the current account deficit in the country, the fact that it is not FDI inflows slowed down, but profitable exits were made, is not an immediate cause for concern. And moreover, again, the global context is foreign direct investment flows have slowed down to every destination, and it is not an India-centric phenomenon.
You know, in this economic survey you put out today, you're saying the government must get out of the way, trust people, we have no option. Business as usual carries a high risk of economic stagnation, if not high risk of economic growth stagnation, if not economic stagnation itself. You're also asking the government to wipe out the trust deficit between government agencies, which have to set the agenda in this regard. You know, what's the message that you're sending? There's a very potent message there. I can read what the message is, but do you think the powers that be are listening to their chief economic advisor on this?
Very much so, and it is again, I would like to clarify to you, when I say government, I refer to government system in the country, which includes state, local, and all government ministries, even in the union government. So it is all government, not just the union government. And I think in general, it is the fact that most of the rules, regulations, and compliances and inspections happen at the state level. And that is what brings with them the fear of growth for small and medium enterprises. And that is what I'm addressing. We need to move towards self-regulation, self-certification with random inspections, rather than micromanaging the affairs of legitimate and lawful enterprises. And by the way, it is not just with respect to industrial activity, it is across all sectors, including education, labor, health, etc. So the approach has to be to let legitimate economic activity happen without too many restrictions.
How concerned are you about President Trump's potential trade tariffs? He spoke about it again, apparently, in that conversation with Prime Minister Modi. The Prime Minister goes in a couple of weeks to Washington, D.C. What kind of actual tariffs are you expecting against India? What are your recommendations, Dr. Nageswaran, to the Finance Ministry and the Commerce and Industry Ministry about how we should try and navigate this?
No, I think, Rahul, it is no point trying to be speculative about it because a lot of things were said during the campaign, etc. They have not yet happened, even for other countries which are in the front line. So I think we shouldn't be trying to jump the gun here and figure out. And these are all actions that have to be taken by the Ministry of Commerce in consultation with various other ministries and industry bodies, etc. And I think it will be somewhat presumptuous on my part to try and anticipate what those tariffs will be and therefore what action should be taken. So speculating on them in public will not necessarily be the best way to approach this issue.
One of the big conundrums in India's growth story has been about private investment. India Inc. investing big time in the India growth story. And many have wondered why private investment, which has been in the mid-70s in terms of capacity utilization, hasn't really kicked off. It has in some sectors, but there isn't a virtual investment cycle which everyone's been expecting. Now, Arvind Subramaniam said recently, and I want your thoughts on it, that the government's policy of promoting a few national champions, of favoring a few companies, has a chilling effect on broader investment, and overzealous taxation, arbitrary application of rules, and weaponizing state agencies has dampened investor enthusiasm. How do you look at this conundrum, and how do you respond to Arvind Subramaniam?
That is his interpretation. I mean, the investment slowdown, first of all, happened in the second decade as well. And that was because of the balance sheet issues that they faced. And the balance sheet issues were fixed, and then the pandemic struck. And as the pandemic ebbed, then we had the conflict in Europe, followed by rising interest rates everywhere. So I think there are multiple causal factors here, and for him to reduce it to this factor is his personal bias and view. I don't have to comment on that. I think the private sector is indeed investing in several sectors. And we may say that the growth of these investments must be even more than what they should be, but that is a matter of interpretation again. But to some extent, the private sector can contribute. Private sector were being subjected to the fact that government is favoring one or two sectors. The fact is, all-round corporate sector profitability was at a 15-year high in March 2024. So what he said doesn't square with this. And therefore, much of the reason for capital formation being on the slower lane is also partly because of global factors, interest rates, and uncertain demand to which they themselves may have unwittingly contributed, and that is where I want them to work on, what they can fix, which is in terms of making sure that hiring and compensation practices are reasonable enough that creates its own demand. And in my press conference, I gave the example of Henry Ford raising the minimum wages because he said, I need my workers to buy the cars that they are making.
One last question before I let you go. You're projecting a growth in the range of 6.3 to 6.8 for the next financial year. If the slowdown is temporary, why is growth next year projected to be roughly in the same range as your growth numbers for this year? Why aren't you predicting a bigger uptick?
So look, the thing is, by and large, we would rather be surprised on the positive side than projecting something high and then feeling that it will be a problem to make it, because again the global environment is uncertain, which is what the entire survey's first half was about. And more importantly, we also know that financial markets around the world are probably also going through this volatile phase, and when the correction happens, that will also have an implication. So we are trying to factor in some of these developments and project a number which has a reasonable chance of being met or exceeded, and that is the kind of approach the Ministry of Finance had taken in the last 5 years with respect to growth assumptions in the budget, fiscal deficit assumptions. Promise what we can and try to exceed that, and that is the thought process behind these projections as well, Rahul.
You've been conservative in your projections. I have one very last question, since I barely get an opportunity to ask you these questions, about urban consumption. You know, the concern has been about whether the rural distress that we saw earlier a couple of years ago is now spreading to urban areas. A lot of FMCG companies in their quarterly earning reports and in the calls have been talking about urban consumption slowing down. How concerned are you about it? What policy prescriptions do you have for the government in terms of recommendations on how to try and fix it?
I think a lot of people have given policy prescriptions to governments with respect to boosting urban consumption, and more importantly, the prescription I have given in the economic survey is for the private sector itself to address it, because slowdown in urban consumption could also be because the formal sector employment generation and compensation growth have been much more modest than profitability growth. And that is, and of course, as I mentioned earlier to one of your questions, some of the macro-prudential actions taken by the central bank may also have slowed down credit growth, which in turn is probably a causal factor behind urban consumption growth slowing down. And in the first 2 quarters of the year, we also had the monsoon, and some of the footfalls might have been affected as well. So I think suggestions to the government in terms of boosting disposable income, etc., are there. But more importantly, I think the private sector can also be its own source of demand by looking at its own hiring and compensation practices.
And then, of course, there's the Prime Minister who spoke this morning of Lakshmi Ji shining on the middle class. So hopefully there was a big message there as well, which will emerge tomorrow. I'm out of time and I want to respect the duration that you've given us, but I do hope that we'll have an opportunity to ask you questions at length. Dr. Nageswaran, for taking out time on a very busy day and joining us. Thank you.
I look forward to that, Rahul. Thank you.
Thank you, sir.